Let's talk to them about the next trade here. Worries over China's economy continuing to hang over the commodity sector. As we mentioned, investors fearing the country will begin to curve lending as soon as its economy remains so hot. So is China a bubble? Let's ask Peter Schiff. Peter, you know, the concern in the market here is that China will start hiking interest rates, and that has really caused some pressure on a lot of these stocks. Your view is that it's not so bad.
Well, I think it is going to be bad for the United States when China starts raising rates, because that's going to put a lot more pressure on the dollar. You know, as the rates for the RMB go up, that's going to cause more money to flow out of dollars into RMB. And, of course, if the Chinese are not going to be expanding their money supply as much, they don't have to buy as many treasuries, and that means the Fed is going to print even more dollars to buy what the Chinese don't want.
Oh, hold on, Peter. Real quick on that point, though. I mean, if you look back when China was raising rates from 07 through 08, it was 17 times. The RMB didn't really move that much against the dollar. In fact, how can you even argue that the RMB moves on fundamentals? It's a managed currency, and the dollar's move against the RMB is totally independent of what they're doing on monetary policy.
No, what's going to happen is, even if they hold the RMB flat, the fact that rates are rising on the RMB, if there's no downside to the RMB because it can't fall against the dollar, then people who hold dollars are going to move to RMB to get the higher yield. There's no downside.
People? Chinese investors or U.S.
all
investors?
Over the world, and people will do it on leverage. People will borrow dollars to buy RMB. There's a carry there. Yes, they will. And ultimately, the Chinese are going to let the RMB rise. They're going to let that band go up. They can't keep the RMB down because then they have to flood their country with money.
The global economy that you say is so weak, Peter, China's still got to export their way out of it. They're going to keep their currency undervalued.
No,
they're going to play the same export game that they've done for the whole year. That's consistent with what you're saying. You're saying the world has no growth. China has to export their way
They
out.
have 1.2 billion people. They don't have to export anything. They got plenty of people in their country to buy their stuff. Look at what's happening to the Chinese domestic economy.
Can I ask a quick question of Tim or Peter? In terms of money flowing into China, into the yuan, is that possible, or will China clamp down on the amount of hot money going into the country?
Well, I mean,
will control that?
Remember,
the money markets are not open to foreign players in the same way that they are here.
So the argument, Peter, is that that basically can't happen.
Yeah, China cannot tighten its money supply and tighten interest without stop buying dollars, without not buying as many treasuries. Because when they keep money supply loose and they keep expanding, that's when they're buying.
They raised reserve ratios this week. They sucked $50 billion out of their market. That's what they did. It had nothing to do with treasuries.
No, they don't have any real tightening until they stop expanding money supply. And when they stop expanding money supply, they stop buying treasuries. That's how it works.
Hey, Peter, it's Joe. Real quick, we've got a correction obviously occurring in the marketplace right now.